Well, hello, everyone. My name is Michel Franks, president of the Luxembourg American Chamber of Commerce, and I welcome all of you to SPAC Craze, why sponsors and targets have become crazy about Luxembourg, the subject matter that interests a lot and many people. And today we broke our record of having an excess of 250 registrars to our lunchtime or after work presentation. So thank you very much for all of you for joining us. Thank you to the AmCham for their collaboration. Of course, thank you very much to ENY for their participation and leadership in this event. Thanks to Tony and Janet for organizing this. Welcome to all. We're also pleased to welcome or to mention the participation of members of the LTIO and of from New York and San Francisco, as well as all a few honorary consuls from around the US, from Luxembourg, and also representative of the Luxembourg Embassy in Washington, DC. So thank you very much for all. Today, our introductory speaker is Alex Pouchard. Alex has close to 20 years of experience and has been partner at ENY for the last, or since 2013. For the last 15 years, Alex has been a member of Ernst & Young's International Tax and Transaction Service Desk program in representing Luxembourg in the US. Alex has worked in New York City, Chicago, San Jose, California. And so thank you, Alex, for the introduction. And Alex will then introduce our additional or lead speakers, Chris Lalo and Carsten Berra. So Alex, up to you. Thank you very much.
Thanks, Michel. When reading the title for presentation today, SPAC Craze and why sponsors and targets have become crazy about Luxembourg, I had to admit I was wondering, were we overselling Luxembourg? And then I look at the two other panelists that accepted to present today, and looking at their high caliber, it's fair to use an expression that travels well in both the US and Luxembourg languages. They belong to the crème de la crème. And why would they be here if it was not for the fact that the game must be pretty interesting for those two to be willing to be part of that presentation? I will hope they will not blush when I say that, but there are two luminaries in their field. Let's start with Chris Lalo. He joined the Houston office of Ernst & Young in 2008 and is a partner in the international tax and transaction services practice. Before joining EY, he was a partner in a law firm. His practice was focused on both domestic and international tax matters in the area of tax planning related to domestic and cross-border mergers and acquisition. Chris also leads the inbound transactions practice for Ernst & Young in the US. He has significant experience in working on various types of capital markets transactions across multiple industries, and has worked with numerous special purpose acquisition companies, SPACs, over the past decade in all stages of their life cycle, from formation through IPO. There is not a single cross-border SPAC at EY where Chris has not acted in some capacity as a lead advisor or as a second reviewer. He's also a past chair of the tax section of the Houston Bar Association. Carsten Berra is joined Sullivan and Cromwell in 2000. He's managing partner of the firm's Frankfurt office and co-head of the firm's capital markets group. Ranked as the only star individual for German equity capital markets by Chambers Europe since 2010, and top deal maker 2019 in M&A by Finance Magazine 2020. Dr. Berra is one of Germany's leading lawyers for both capital markets and M&A matters. His capital market experience on both the issuers and underwriters side includes many of the largest and most significant IPOs, rights offerings, and listings in Germany within the last 2 decades. He has led his law firm's work on 15 of the 20 largest IPOs in Germany since 2000. He has also significant SPAC and SPAC expertise. Has worked with Lexstar SPAC 1 on the first SPAC to be listed on the Frankfurt Stock Exchange, and is currently advising on numerous SPAC listings. At the same time, Dr. Berra has advised on many landmark M&A transactions in Germany, thereby shaping especially the German public M&A market. So with no further ado, I will ask Chris to maybe give us an overview of what is a SPAC.
Thank you, Alex, and thank you for that very generous introduction. Very nice to be with everybody, and I'm flattered that this is the largest group of registrations that the Luxembourg American Chamber of Commerce has had. I think it's indicative, not as much about the speakers as it is about the topic. It's hard to go anywhere these days without hearing about SPACs, and I think we'll start as I give an overview. Start with a little bit of background on what's created the SPAC craze, as Alex has put it over the last year, and then maybe try to demystify a little bit some of the more recent press, which I don't think has been really truthful of what's going on in the SPAC market in light of some of the recent releases from the SEC and the impact that's having on the market. I think if you believe the press, those releases are having a much more detrimental impact than certainly we are seeing in practice. And there still is a very large appetite from our clients to continue to sponsor SPACs and to do what we call de-SPAC transactions. And Luxembourg is certainly a central part of that as the SPAC product has become more global in nature. And so if we take a step back and just think about what is a SPAC. So a SPAC, special purpose acquisition company, is just what we call a cash box. So it's a company that is taken public, typically by a sponsor, most typically an asset manager, private equity fund, with basically just an idea to take cash from the public and to take that cash and use it to, through the public company, acquire a private company. And so it is in effect for the private company that is the target of what's either called the initial business combination or the de-SPAC transaction. It's effectively an IPO transaction in many respects for that company. And so SPACs have been around for a long time. I've personally worked on SPACs for the last decade. But at no time has the just volume of SPAC activity been anywhere close to what we've seen over the past now 12 to 14 months. And some of the numbers are somewhat staggering when you look at SPAC IPO activity. The SPAC IPO activity in 2020, which people referred to as the year of the SPAC, was about $80+ billion. I think the exact number was around $83 billion of capital put into SPAC IPOs in 2020. And that number grossly exceeded the combined decade before 2020 of SPAC IPOs. And so in 2020, 83 billion in capital put into SPACs across all industries, but primarily led by tech and life sciences. Not surprising given what was going on with the pandemic, that tech and life sciences would be the two predominant sectors, but really a good cross section of SPAC IPO activity across different sectors once you get beyond the tech and life sciences sector. So 2020, 83 billion in SPAC IPOs. 2021, from January 1 through March 31, you had over 100 billion in SPAC IPOs just in the first 3 months of 2021. So 2020 was a record year. 2021 eclipsed that just in the first 3 months of the calendar year. And so just a tremendous level of SPAC activity during really 2020 and the first 3 months of 2021. We'll talk about in a few minutes sort of the slowdown in IPOs currently following the SPAC releases that the SEC put out now about 6-7 weeks ago. But just some other statistics and numbers that I think are really helpful to frame the discussion. And so right now there are over 500 public SPACs in the market that have not yet closed their initial business combination or de-SPAC transaction. Of those 500 plus SPACs, over 400 have not yet even publicly announced the target for their de-SPAC transaction. So you have a phenomenon with over 400 SPACs in the market, still at different stages of the deal life cycle, but still looking to announce a deal with a target to take that company public. And what that's created is a huge level of competition among SPACs for quality targets. And what we've seen over the course of the last year, and part of the reason why Luxembourg has become such a big player in the overall SPAC story, is that when you think about SPACs, the SPACs started really as a US product. They were US listed companies who looked to acquire US target companies. And so basically we're domestic transactions. Over the course of the last 10 years, I would say 80% of the deals that I worked on were US deals involving US SPACs, and maybe with the remaining 20% being international. What's happened over the last year, because there are so many SPACs in the market, SPACs have been forced to really look on an international scale for their acquisition targets. And so as people started to look outside the US for acquisition targets, really the first natural place that people looked was Europe. It's, from an ease of transactability perspective, outside the US, Europe is really the next jurisdiction where it's easier to get deals done. People are familiar with US style deals in Europe. And now we've really seen a broadening of the SPAC scope and the way that they look at transactions to include Asia. Israel has been a hotbed of transactions. And so SPAC deals are truly global at the moment, but Europe is still very much a center of activity. And when you look at doing European deals, and Alex and Karsten will talk about some of the reasons for this, Luxembourg is one of the key jurisdictions that people look at to either be the holding company for a European group of entities if the target is in Europe, or also potentially, now as people look to do European SPACs, Luxembourg is one of the key jurisdictions that people look at to be the entity that is the publicly listed company. And so that's a dynamic that's really come up over the last 3 or 4 months is these European listed SPACs. And so before the couple of other things I wanted to talk about during this introduction before turning it over to Alex were just the slide that Alex has up on the screen. Really just goes through some of the key players in the SPAC space and how they play in the space, and they each have their own very important function. So the principal group that is connected with starting the SPAC is the sponsor group, which, as we said, traditionally are private equity funds or other asset managers, although as I'm sure you've read in the press, has now included various celebrities and athletes. And we were joking before the call that it seems like everyone has a SPAC these days. And the first SEC release cautioned people to not invest in SPACs just because they have celebrity sponsors. And so, when the SEC is issuing a release cautioning people about investing with celebrities, that something has become very popular. So the way the sponsor basically makes money in a SPAC transaction is kind of a carryover of the old private equity model with a 20% carry. But the difference in the SPAC space is that the sponsors take what are called sponsor or founder equity, and that equity equals 20% of the equity in the SPAC post IPO, not post de-SPAC transaction, but post the SPAC IPO. And the sponsors' equity and warrants typically have no economic or voting rights other than to appoint the directors of the SPAC and until the de-SPAC transaction closes. But when the de-SPAC transaction closes, the sponsors' equity converts into just regular Class A common shares, but they get those shares for a relatively small amount of upfront capital investments. Typically, the sponsors are just paying the underwriting cost to get the SPAC public, and in exchange for that, they get this 20% equity stake in the SPAC. And so you can see how that's a fairly generous economic deal that sponsors make with the public, and basically they get that for the upfront investment and for taking the risk associated with the SPAC and the possibility that the SPAC may not ultimately get public, or may not ultimately complete a de-SPAC transaction. And so then the public who comes in, which includes your retail investors and hedge funds, they come in typically at $10 a share at the time of the IPO. And in exchange for that, they get both a Class A common share and a warrant. And typically the warrant coverage in the current market is around a quarter of a warrant per share. Sometimes we see a fifth of a warrant per share. And those warrants basically are like an equity kicker for the public. And even if the public decides in connection with the de-SPAC transaction to redeem out their equity, which they have the option to do, they get, as long as they vote yes for the transaction, they get to keep their warrants. And so that's why we noted here that for the public, and including the hedge funds who are a big part of the IPO group, they get to keep this upside with the warrants associated with that initial investment. And then another very important part of the SPAC story is the PIPE, which is a little bit of a misnomer, because it's people tend to think of PIPEs as preferred equity instruments, and SPACs, PIPEs are really just investments in common equity. But the PIPE serves a couple of very valuable functions. One is that, because, as I said, the SPAC public shareholders have the ability to redeem out their equity in connection with the transaction, should they choose to do so. The PIPE serves as basically a backstop against those public redemptions at the level of the SPAC. And then second, the PIPE really serves as a validation for the valuation that the SPAC puts on the target company, because the SPAC will typically in equity value a target company, and I'm sure you've seen the valuations in the market have been high, and the PIPE comes in after the public announcement of the deal, so knowing the valuation for the target company, and so it's seen in the market where you can raise a robust PIPE that people feel like the valuation on the target company makes sense, and so the PIPE serves those two very important purposes. I know, Alex, we don't have a lot of other time for overview, but I wanted to maybe, Tony, move forward to just talk for a couple minutes about the recent SEC releases. Sure. And just the impact of that on the market. So I think we had a slide, Alex, with a couple of brief bullets on that, right?
Yeah, I think it may be slide 9. It was.
Yeah, I think I went through, before we had the slides up, I went through a lot of the IPO data. So keep moving forward. While we're finding it, I'll give you, okay, maybe let me just give you the kind of the basics, because the SEC releases have been a hot topic of conversation. So the SEC release that's really had the biggest impact on the SPAC market was the release 6 weeks or so ago around SPAC warrants needing to be treated as a liability for financial statement purposes. And so that has caused a number of SPACs who have treated the warrants as equity on their financial statements to need to restate their financial statements. It also has really cooled the new SPAC IPOs until people get their arms around the treatment of warrants and how to either avoid liability treatment or just absorb the liability on the balance sheet without any negative public impact. If you believe a lot of what you've read in the press, the press has viewed the SEC's release as almost like a death knell for SPACs. I think that is definitely not what we're seeing with our clients and not what we're seeing in practice. I mean, the M&A activity among SPACs is as hot as it's ever been. And we still have a number of clients that are looking at doing SPAC IPOs, and people are looking at different ways to potentially structure the SPAC warrants and to avoid liability treatment. And my guess is, I know internally we have several clients who are working on that, and will likely have something public in the coming weeks on SPACs that have a revised warrant structure that we think avoids liability treatment. And our guess is that once that gets back out in the market and people see that there's a path forward, that the SPAC IPOs will pick back up. And as I mentioned, we have a number of clients who are looking at forming SPACs in Europe and accessing the capital markets in Europe, looking to do something similar to what we're doing in the US on exchanges like the Euronext exchange in Amsterdam, and in many cases using Luxembourg corporate vehicles as those public companies. And so with that, Alex, and that there's a lot of SPAC overview to do in 15 minutes. So hopefully that did justice to a bit of the broader dynamics and in part why we're seeing Luxembourg as such a big player in the overall SPAC market.
No, thanks, Chris. That was very instructive. Let's pass it on to Carsten. Carsten, you were involved in the first SPAC listing in the Frankfurt exchange, and they used the Luxembourg vehicle for that matter. Would you be able to explain why they eventually went for Luxembourg?
Yeah, no, absolutely happy to do so. Actually, we started, I think, last August, and we were approached by Klaus Hommels, a serial founder and entrepreneur, and he actually sponsored a lot of growth companies and startup companies for decades. And he asked us, well, we want to do a SPAC. Where do we do it? Yeah, and so we were really like starting from scratch and comparing different alternatives. And I'll talk a little bit more in detail about it, but it turned out that Luxembourg is a very attractive place to be, because you always have to look at three different layers. And the first layer is, where do I have my corporate seat? Where do I have my entities? The second layer is, which is the competent regulator that will be responsible for the IPO? And the third one is, where do I go for the listing? And we had the challenge here that we wanted to really mirror everything that is typical for a SPAC in the US. So not like a blind pool or cash box IPO with simply issuing some shares, as we have seen some examples in Europe during the last 10 years, but really structuring it with warrants, with redemption rights, with all the typical features that you have in the US. And we knew that there would be demand both from SPAC sponsors coming from the US, but also from European sponsors. And so when you start comparing the different jurisdictions for the first layer, namely, do you want to go for a company resident in Germany, France, Luxembourg, or the Netherlands? It turns out, I'm sorry to say that as a German, but that Germany is certainly not the place where you want to be, because the corporate law is simply not flexible enough. So when we did the whole analysis, Luxembourg and, in all fairness, the Netherlands are the two countries where you would see people choosing for purposes of the registration of the entities in the end. Yeah, so that's basically the first element, the first layer. You will then find out that there is a typical that there is a slight additional problem, because Luxembourg has a wealth tax, but that can be solved very easily, and we found a way. And so Luxembourg is the place to be from a corporate law perspective. And the second element here is, once you decided for Luxembourg as a corporate seat, you also have made the decision for the regulator, because under European law, that is by definition the regulator in the country where you have your corporate seat. So actually it's the Commission de Surveillance du Secteur Financier, the CSSF. And the CSSF, as we all know from many other prospectuses that have been approved by the CSSF on bonds and other especially debt instruments, the CSSF is a very, very let's say pragmatic and reliable regulator. So we went to the CSSF and presented our case, and after certain discussions on whether they want to approve SPACs or not, they were indeed supportive for our SPAC project and for all the SPAC projects that we have seen since. And the CSSF also only takes 5 to 6 weeks from filing the prospectus for the first time with the CSSF and the approval of the prospectus. So that's certainly something that is very helpful. In other countries, that can take much longer. And also, Chris, you mentioned the SEC guidance and all the issues around the warrant treatment over the last weeks. Even during that period, the CSSF was willing to accept our revised prospectuses, our revised financials, and our revised cap tables, showing the warrants as debt, and actually under IFRS even showing the shares or part of the shares as debt. So that was something that was possible here as well. And the third element is where to list the SPAC shares. Here we see a trend towards Frankfurt on the one hand and Euronext Amsterdam on the other hand. And also here it's a pretty easy process, because the CSSF just passports the prospectus to either Germany or the Netherlands, and that can then be used for purposes of the listing on the Frankfurt Stock Exchange or on the Euronext Amsterdam. So basically, all three elements are possible and easily and can be implemented very easily. In addition, as we said here on the slide as well, the prospectus can be drawn up in English, German, or French, and you can also handle all the communication with the CSSF in any language. That's actually really helpful. And then if we go to the next slide, please. We put up a couple of points, and I know, Alex, you will touch on many of those topics in a little more detail in just a few minutes. So how long does it take overall? Overall, we would say it's about 8 to 10 weeks from the kickoff to the completion of the process. You probably need 2 or 3 weeks to file the prospectus, and then, as I said, you need 6 weeks to get to CSSF approval. And in a typical SPAC, the book building period in the end is very short. It's just a day or two. So this goes very quickly. One important point from a regulatory and legal perspective, I don't want to bother you with the details, but you on the US side, you may have heard of the Investment Company Act, which restricts certain investments, and there is a comparison in Europe called Alternative Investment Fund Regulation, and the CSSF and other European regulators have now confirmed that a SPAC is not considered an alternative investment fund, which allows for marketing alternatives that would be restricted otherwise. Now, as I said, Luxembourg can replicate these US features with the warrants. So all the SPACs that we have set up now, we have completed 3 SPACs that are listed now in Frankfurt, based in Luxembourg. And we are working on 10 others, some of which go to Euronext Amsterdam, some of which go to Frankfurt. And they all basically follow the US model. with all the trends in the market that we see at the moment, but it's a very good practice, and we need to see what the de-SPAC transactions bring now. I would leave all the other topics actually with respect to the triangular merger and the cross-border merger to you, Alex. Perhaps just one final remark. The corporate form that you would use is a Société Européenne. It's an international, really European corporate form that you can use here. So also very good for international investors who like it and who use it very easily. So our experience over the last 8-9 months is that this is a positive signal of European regulation and European regulators, where we were able to replicate developments in the US in Europe without big problems.
Thanks, Carsten. That's very useful. Let's move on to the next slide to discuss Luxembourg tax aspects. So besides the Luxembourg legal aspects, there are definitely tax advantages by using a Luxembourg company as a SPAC. And maybe before we get into that, I think it's important to keep in mind there are two angles to Luxembourg and SPACs. There is Luxembourg in the context of setting up a SPAC in Luxembourg from the start, or moving your SPAC from wherever it is to Luxembourg at the time of the business combination, which is sometimes referred as a de-SPAC. It's fair to say that seen from the US, when it comes to setting up a SPAC, most of the time the choice is between two jurisdictions. It's the US, Delaware, or Cayman. And very much the reason for US versus Cayman is that if you do have a target in mind that is based in the US, you will think of using a US SPAC. If you do have a target in mind that will be overseas, outside of the US, you're better off to have your SPAC outside of the US, and Cayman will be, let's say, the most obvious candidate at least. However, from the point of view of Europe, that is not necessarily so evident that you will go for a Cayman SPAC. A reason may be reputational risk or tax issues associated with having a SPAC in the Cayman Islands. So that's where Luxembourg is again more commonly used in Europe to be set up as a SPAC. There is a discussion that Carsten was alluding to, which is what about net worth tax? So on that, there is one point. The cash is actually on an escrow account until the time the business combination is identified. So in practice, that means the Luxembourg company has no access to that cash until that time. So from a Luxembourg GAAP standpoint, there is a bit of a discussion as to whether you will book the cash in the first place on your balance sheet, or if you do that, you should have a provision for the fact that you are at risk to repay that cash at any time if the investors do not agree with the proposed target. So that could be one way, let's say, to take care of the net worth tax, because eventually you do have an asset, but you have a corresponding liability, or you have no assets in the first place for net worth tax purposes. There are some other ways, but that's probably, let's say, the most practical way I can discuss here during the call. Now, if we go to the next slide, Luxembourg is very much also very interesting in the context of the de-SPAC process. So that's very much where you have set up your SPAC, let's say in Cayman as an example, and at the time of the business combination, you're thinking of moving your SPAC to a different jurisdiction, because using a Cayman in that context may not be very advantageous. One reason may be you do not have a rollover regime for the target investors. Another reason may be that you would have withholding tax leakage anytime distribution of proceeds will be made by the target subsidiaries to the top publicly listed company. In that context, I think it's interesting to know that Luxembourg offers a very wide participation exemption regime. So that makes Luxembourg very attractive. We have CFC rules like any other EU jurisdiction, but those rules are eventually flexible in a way that you would not expect to have CFC inclusion as long as the significant people and functions in respect of any low tax entities are not performed in Luxembourg. There is one point keep in mind is withholding tax on dividend distribution. We do have a withholding tax of 15%, but there are many exemptions available, especially if you invest through a qualifying vehicle. So think of institutional investors that will make their investments through pension funds. They will typically qualify for withholding tax exemption. If they invest into some specific purpose vehicles, they should qualify depending on the jurisdiction. I'm thinking of Hong Kong or Singapore, but what is interesting is that Luxembourg has these withholding tax exemptions that kicks in if the shareholder has an investment of at least 1.2 million euro or 10% investment. A 10% investment, obviously, for a publicly listed company may be pretty hard to reach, but a 1.2 million euro investment is easier for a lot of, let's say, institutional investors. For individuals, you would have the withholding tax, but you would expect that they can credit that withholding tax against their domestic tax liability. So if we go to the next slide and think, we have basically three examples of where Luxembourg becomes relevant. The first one is Luxembourg is being set up as a SPAC from the start in Luxembourg. So that's slide 16. So in that example, again, in that example, thank you. In that example, we are assuming that you will de-SPAC to Luxembourg. So you will stay in Luxembourg. So the de-SPAC is being done by having a so-called reverse triangular merger. You would set up a subsidiary under the SPAC, which possibly could be in Luxembourg, and that subsidiary will merge into the target. The target will issue shares to the SPAC, and in return, the SPAC will issue shares to the target owners. So that will be that triangular merger that is doable in Luxembourg. By doing so, you would obtain rollover relief. I mean, it's on a case-by-case basis, but in most jurisdictions, in most significant jurisdiction, you would expect to be able to rely on rollover relief. If we go to the next slide, in the interest of time, so here it's a slightly different fact pattern, right? So we compared to before, where the SPAC was in Luxembourg and was staying in Luxembourg, the SPAC is set up in the US, but will de-SPAC to Luxembourg, and that's where you will do like what is referred sometimes as a double dummy. You see the SPAC on the right hand side, the target on the left hand side. The sponsor would set up a holding company in Luxembourg and two merger sub underneath. Merger sub 1 will merge into the target. Target will issue shares to Holdco, which Holdco will issue shares to the target owners. And similarly, merger sub 2 would merge into the SPAC. SPAC would issue shares to Holdco, which will be issued to the sponsor. So eventually, by doing so, you have been able to combine the two parts of the equation under one holding company. Again, idea would be to do that in a fashion that is not triggering tax at the level of the owners, which hopefully in most instances will be the case using a Luxembourg vehicle. If we go to the last slide, the last slide is showing the case of a non-US SPAC, not the US. We show Cayman because it's very common, at least on this side of the ocean. And you see that there are very much two ways to do that. You could do on the left-hand side a migration from Cayman to Lux and create a merger sub and do your reverse triangular merger free of tax on a rollover basis. On the right-hand side, you do a migration followed by a cross-border merger. Here again, it shows that Luxembourg is very flexible. Unlike many other jurisdictions, you can migrate from Cayman to Lux and Luxembourg to overseas without interruption of the legal personality. You can also do cross-border mergers with a lot of jurisdictions. So that's a draw for Luxembourg. Besides what I was mentioning earlier in terms of tax advantages of using Luxembourg, I think a few that can be of relevance in a specific context of a SPAC is the fact that there is no withholding tax on interest, which can be useful if going forward you're planning to take up some third-party debt. You also have Luxembourg has implemented defensive measures vis-a-vis non-cooperative jurisdiction in a fashion that does not go beyond what was required from Luxembourg, in the sense that there is no domestic blacklist as opposed to some other countries. The defensive measures was to disallow interest or royalty payments to those non-cooperative jurisdictions, no withholding tax, for instance, which in the context of a SPAC is probably the less invasive and non-taxpayer friendly way to implement the rules. Another, let's say, advantage to mention is the fact that you do have flexibility to own treasury shares, which can be useful in the context of issuing a stock option plan. If by doing that stock option plan, you were to buy shares on the market and sell them back to the employees at a gain, those gains will typically qualify for an exemption if structured properly. So that's a few more points to keep in mind. From a foreign standpoint, again, besides the fact that we were mentioning, you may have access to rollover relief in most jurisdictions by using a Luxembourg company. You also have some other draws, like for some investor, it may be better for them to invest in in Luxembourg because it's, for instance, in the US, a tax resident company with a treaty with the US, so you will have access to that 1H11 treatment. If you think of access to the US Lux treaty, there is a LOB provision, like in many treaties with the US, but that LOB provision is pretty attractive in the sense that if you do have at least 50% US shareholders at the very top of your Luxembourg company, and you do have a US subsidiary, you will be able to get access to the treaty, irrespective of the chain in between, ownership chain. So a few more things to keep in mind. So to wrap it up in the interest of time, while there has been discussion as to whether SPACs are a fad or a permanent fixture when it comes to a mean to get financing, I think it's fair to say and safe to say that Luxembourg, a long-standing investor-friendly approach to business, is part of its DNA, and hence while it is probably likely that there will be less SPACs in a few years than there is today because there is a huge craze, you would expect, however, that Luxembourg is likely to remain a permanent fixture when it comes to evaluating whether Luxembourg could be your jurisdiction for that SPAC. And with that, I will turn it over to Michel.
Well, thank you very much. Thank you very much. That was a great presentation. And Alex, your explanations were really spot on. And thank you to Chris and Carsten for more explanations and clarifications on your experience in this matter. And the whole new world and the whole new way of structuring financial matter. So quite fascinating. I just also want to remind everyone that the meeting presentation was recorded, so you would have access to it. And I'm looking on the chat room. We do have a few questions. One of them is Carsten mentioned that net wealth tax can be mitigated. Would he tell us more about that, please?
Yes.
And if you have any more questions,
Alex,
anyone, please.
Alex is probably the expert on that, and should probably answer the question rather than me.
Yes. So to that question, I did allude to it in a bit during the presentation, but there are basically two ways. You could take the view there is no net worth tax issue in the first place because of the specific of that escrow account, that you basically are not the beneficial owner of the cash, and that also could be translated in the way it's being booked under Luxembourg GAAP, either because there is a provision for the risk to have to repay, or because you could simply say there is no cash. That's the two approaches that I'm aware in that context. So that could be one way. Another way, if you want to, let's say, make sure that there is no controversy whatsoever, you could also set up a company underneath and put your cash into that company. And in that scenario, you will be able to claim the participation exemption for net worth tax because the asset is no longer cash but shares in a qualifying subsidiary.
And that's actually what we did in all the scenarios at the moment.
Okay. That was the only question we had in the chat room. Are there any other questions by participant. I think maybe Janet, you can unmute everyone. And if there's any more questions.
Yes, there is one more question, and the people, Alex, is it possible to share the slides with the people attending?
I think it should be possible. Yes. Let me just check that one point with our QRM team. We have
Yes.
very specific rules. So.
If you check that, and then we could put as a PDF, and it could also go on our website if that's
Sure.
okay with you. All
We'll
right.
run it by them. Yeah.
Okay. All right.
Okay. If not, I will turn over to Paul Sonnenberg in Luxembourg. If you're there, if you could.
Yes. This was a brilliant presentation. The crowd in Luxembourg, of course, appreciates the partnership with LACC NYC, and we're very pleased that you all have given this excellent presentation. I will say in Luxembourg, there have been a number of people who have called us at AmCham saying they were having difficulty for some reason or other getting in. So we will be very pleased to go ahead and be able to have a copy of the presentation that we can make available to people who signed up, and also copies to the slides as well. In Luxembourg, over the past couple of years, I think you all are aware that from time to time, we get hit up with LuxLeaks things and issues associated with are we unfairly using Luxembourg as a vehicle to avoid taxation and to avoid other things. We have worked very hard to try and make ourselves transparent and to do compliance things to mitigate accusations against Luxembourg in that regard. I think the government deserves some credit for that. That also has made it a little bit harder for us in some ways to go ahead and find clever new things that we can do that are opportunities for business. So it's delightful to see something where we are naturally positioned in a way that makes us compatible to do business with the United States, and to do it in a way that is perfectly legal, but we have a little bit of a competitive advantage compared to some other locations. So I am sure that there are going to be a lot of people who will have big smiles on their face for the rest of today and for tomorrow, and a huge interest in this. You not only had a big crowd in New York, but you had a big crowd signed up on this side of the Atlantic too in Luxembourg. So thank you very much for sharing this. I would tend to think that this is an opening door. There will be a lot more to come to this, but I will guarantee you there's a lot of excitement. There will be a lot of excitement in Luxembourg on this topic. On behalf of AmCham Luxembourg, we thank everybody for allowing us to participate with our members as part of this process, as we always do. Again, my sincere thanks for a great presentation. And Michelle, Tony, and Janet, we appreciate your support and your partnership, and we wish everybody a great evening. Thank you all very much.
All right. Thank you, Paul. And again, thank you to Chris and Carsten and Alex. And good news from New York City. The city is opening up again. As of today, officially, one is not supposed or required to wear masks in the street or if you go to the restaurants. So, and this development happened just in a matter of days, starting last Friday till today, 4 days. I mean, this, as fast as COVID came, it seems to be disappearing. So we hope and we wish all of you guys to start enjoying the same sort of like freedom the way we have been, I would say we've been granted that for the last few days. So best wishes to all. Thank you again for a great presentation, and on to the next one. Goodbye, everyone.
Bye.
Thank you. Bye-bye.
Thank you.
Thank
Bye-bye.
you, everyone. Have a great day. Thank you, Alex.
Thank you, Tony. Bye, everyone.
Bye.
Thank you. Bye.